about 2 years ago, one of my friends in real estate who does student housing syndication,
Mhm.
we had lunch. He just said, "Hey, Ethan, you keep all that money liquid and you have a really high net worth. Have you ever thought about being a loan guarantor or a key
Mhm.
principal on a deal?" And I
Yeah.
said, "I don't know what you're talking about. That sounds like a scam. You're telling me I can just sign on stuff and I get paid and I don't have to do anything?" He's like,
Mhm.
"Yeah. I mean, there's a role for guys specifically to do that." And I was just, my
Yeah.
mind was blown. I was like, I got an economics degree from Cornell. I went to Columbia Law School. I worked at some of the best law firms in the country. My wife worked at JP Morgan,
Yeah.
Goldman Sachs, got an MBA from Harvard. We've never heard of any of this stuff. Just like the best time to start in real estate was 10 years ago. Second best time is right now.
Mhm.
So I said, well, hey, I should have been doing this 10 years ago.
Hey, I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different from everything else out there. I bring together new and aspiring investors on each and every episode and let the aspiring investors ask the questions that they need answered. And if you're an aspiring investor yourself, you probably have the same questions. So before you get to this episode that we have prepared for you, make sure you hit the subscribe button and that little notification bell to make sure you get notified every time we post a new episode. And now, enjoy the show.
Welcome to another episode of the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show. We've got a great guest on the line and a very interesting topic that I think a lot of people don't think about until they actually need it. So without further ado, Ethan Gao, welcome to the show.
Thank you so much for having me, Brian.
Absolutely. Let's start out talking about you. Tell us a little bit about yourself.
Sure. I had a very standard Wall Street type of career along with my wife. And then we started doing real estate investing about 8 years ago and then transitioned full time into being more entrepreneurs
Mhm.
about 7 years ago. So I went to Cornell University at the age of 16. I
Mhm.
met my wife first day of class. She was also a freshman. She had just
Nice.
turned 18. We've been together for 22 years and we have 5 kids together. The youngest is 2, the oldest is 10. They're
Okay.
approximately 2 years apart. Both my wife and I come from immigrant backgrounds and we
Mhm.
lived in small town America before we went to college. So we didn't really know what Wall Street was. We didn't really know what finance was. We didn't know real estate either. So at college, one day, some upperclassmen told my wife that they did investment banking internships in New York
Mhm.
City, and it was great. And investment banking people made a ton of money. So my wife said, "Okay, well, I'm going to go do that. That sounds great." So she said, "Hey, if you're going to go to law school, you need to go to law school in New York City." So that's
Mhm.
why I went to Columbia Law School. I graduated college in 3 years, so I went at the age of 19. I'm pretty sure I was the youngest guy in the class there.
Probably. Yep.
I was definitely not the smartest or the most hardworking, though. Let's just get
Yeah.
that right out of the gate. So my wife did investment banking for a couple of years. Then she worked at
Mhm.
a big private equity firm for a couple of years, and then she got an MBA from Harvard. So I practiced in New York City for a couple of years, then moved to Boston to
Mhm.
accompany her while she went to business school, and then we moved back to New York. I worked in what's called big law firms. Really high end mergers and acquisitions firms. We charge hundreds, thousands of dollars per hour to do that type of work. And then we eventually ended up moving to Houston, Texas once
Mhm.
we had kids and my wife didn't want to work outside the home anymore. And the reason I chose Houston was I wanted to live in a state without a state income tax. And I
Yep.
wanted to buy a big house in the suburbs. I'm currently in my house. You won't be able to tell, but it's 4,400 square feet. And
Nice.
it's too small for us, to be honest.
Mhm.
Too many kids
Yep.
and too much
Understand
stuff.
that.
Yeah, you totally understand that.
I do.
Uh,
Yes.
so basically, 8 years ago, I still had one of those jobs that was Wall Street in
Mhm.
nature, but worked in Houston instead. So we did a lot of M&A type of work and
Mhm.
IPOs for oil and gas companies because we're in Houston. And it was just one of those situations where I made a lot of money at my job. It wasn't particularly enjoyable for
Mhm.
the college football fans out there. Working at one of those jobs is basically choosing to go play in the SEC. And you're going to play against Nick Saban
Yep.
and Alabama every day or Georgia every day. And if you don't bring your A game, you're going to get embarrassed. You're going to lose
Mhm.
59-0 and you're going to get yelled at and you're going to get chewed out. And the people that work at your firm are also going to be really intense. Your
Mhm.
clients are going to be really intense because they're paying you thousands of dollars per hour. And then your counterparties on the other side, those lawyers will also be really intense. And then their
Mhm.
clients will also be really intense because they're also paying their lawyers thousands of
Mhm.
dollars an hour. So just one of those jobs that was not sustainable for me personally. I didn't really want to keep working that hard. So I went down 2 lines of research to try to figure out how to exit that life.
Mhm.
One was franchising. So I did quite a lot of research into buying franchises and which
Okay.
ones to buy. And I relatively quickly concluded that for me, buying a franchise was basically the same as buying a terrible job. So I figured if I didn't really like my current job, they paid me a ton of money to be there. I didn't have to buy it. So that just looked like a bad deal. And then the second line of reasoning that I went through was real estate. And specifically, I don't come from a real estate family. I don't come from an entrepreneurial family at all. I come from a
Mhm.
pure Wall Street buy stocks type of background. So what really attracted me to real estate was a lot of the gurus and a lot of the people that put out content in real estate would actually, as part of their shtick and marketing, they would advertise that they were not particularly talented at school.
Mhm.
So maybe they didn't go to college or they did really poorly in school and they were bored, but they're smart. And then they would also advertise that they started with very little money,
Yeah.
$5, $10, and then they borrowed it all from hard money lenders. And now they own 2,000 doors and, they got a super amazing spouse. They got a great car. They have a great house and all
Mhm.
that jazz. So
Yeah.
that really appealed to me because I kind of came at it from the converse, which is, well, hey, I'm amazing at school. My wife's even better than me at school. We already saved millions of dollars from our jobs. And I'm a lawyer, so I understand transactions and paperwork. So I don't even need to try to achieve as much as that person did.
Yeah.
I just need to do like 10%. Give me dozens of doors. I don't need thousands of doors. Just give me dozens of doors.
Right.
So that's how I decided to go into real estate. So specifically, I started out in single family.
Mhm.
I started by being a hard money lender. So I would lend people money to fix and flip houses here in the Houston, Texas area.
Mhm.
I've lost count of how many of those deals I've done, but I'm pretty sure it's over 300. So I would just charge them a high interest rate
Mhm.
for them to borrow my money while they flip the house. And then about 2 years ago, one of my friends in real estate who does student housing syndication,
Mhm.
we had lunch. He just said, "Hey, Ethan, you keep all that money liquid and you have a really high net worth. Have you ever thought about being a loan guarantor or a key
Mhm.
principal on a deal?" And I
Yeah.
said, "I don't know what you're talking about. That sounds like a scam. You're telling me I can just sign on stuff and I get paid and I don't have to do anything. I don't have to find a deal. I don't have
Mhm.
to put in a dollar. I don't have to manage this deal." He's like,
Mhm.
"Yeah. I mean, there's a role for guys specifically to do that." And I was just, my
Yeah.
mind was blown. I was like, I got an economics degree from Cornell. I went to Columbia Law School. I worked at some of the best law firms in the country. My wife worked at JP Morgan,
Yeah.
Goldman Sachs, got an MBA from Harvard. We've never heard of any of this stuff.
Mhm.
So I said, well, hey, I should have been doing this 10 years ago. Just like the best time to start in real estate is the best time was 10 years ago. Second best time is right now. So that day I decided, well, I just need to start networking in commercial and multifamily and look
Mhm.
for those key principal loan guarantor opportunities because you got to
Yeah.
start somewhere. Over the past 2 years, I've been very active in joining the various multifamily and commercial
Mhm.
networking events on Zoom and a couple locally in Houston. So at this point, I'm on GP teams with more than 1,000 units across
Mhm.
the country. I also have quite a few non-multifamily commercial deals as well. I've been
Yeah.
involved in industrial deals, hospitality, office,
Mhm.
retail, in addition to standard multifamily. One thing that resulted from networking for the key principal loan guarantor opportunities was a couple of people just remembered that I have a large amount of liquidity
Mhm.
around. So a few months ago, somebody said, "Hey, I've got a friend. She's raised about
Yeah.
8 million out of 10 million that she needs to close a deal. She's missing the last 2 million. She really can't get an extension. Ethan, we know you keep a lot of liquidity. Would you be interested in talking to her?" And I said, "Sure, why
Yeah.
not?" So I talked to her and then we just struck a deal. So this is where kind of my gap lending program was born in July of 2022. I essentially lent the lead sponsor money so that
Mhm.
she could close her deal. She could not get an extension. She had a lot of earnest money
Yep.
at risk. She had already raised $8 million from her investors.
Mhm.
She did not want to return $8 million to her investors and then
Yeah.
have to explain to them why she couldn't close a deal. And then
Mhm.
she wouldn't make the acquisition fee. She would have spent all this time doing the
Yep.
deal and she actually liked it. It was in her core market, et cetera, et cetera. So that's where this program was born. And then since then, I have executed on a handful of others. I've done about six,
Mhm.
and I've looked at another 20 situations. So, what my comparative advantage and what I really offer are the following. So, I
Mhm.
keep a large amount of liquidity, it's my own, or I control it. You're looking at the decision maker
Mhm.
instead of trying to find 20 people with 100K to help
Yep.
you fill your gap. You talk to one guy. I'm reasonably well known in our kind of niche industry, so a lot of people can vouch. I'm a really easy person to deal with. I just straight up tell you yes, no. If you ask me, Ethan, do you like cats? I'm going to reply no. If you ask me, Ethan,
Yeah.
do you like dogs? I'm going to reply yes.
Okay.
And I don't really honestly care if you like dogs or cats either.
Mhm.
I'm just going to shoot you straight, and I'm going to tell you if I'm going to be able to do your deal or not.
Yeah.
So if I tell you on a Friday that we're going to do all the deal documents over the weekend and we'll sign, and then we'll wire in the money on Monday. You can go ahead and just watch Tennessee versus Georgia or the Cowboys play. You don't need to sit there and worry about if the money's going to be there on Monday morning.
Yeah.
Right.
And there's a couple of things to unpack there. I mean, and more for the listeners, when you get your first loan, and this is something that a lot of people had to do. Ethan mentioned KP guarantor. Lenders aren't going to lend to a brand new group or any group unless they have experience and a sufficient amount of net worth and liquidity. And typically it's about net worth has to be greater than or equal to the loan value. And liquidity, depending on what loan program, you're talking about, some lenders are going to do like a year worth of principal interest payments. Other lenders are going to do a certain percentage of the loan amount. So you have to have net worth, you have to have liquidity, and you have to have experience. And what one of the things Ethan said he started out with is being that guarantor, being that KP, basically lending people his balance sheet and his liquidity to help them qualify for the loan. It's an explanation that I needed, when I started. So hence the explanation there.
No, that's an amazing explanation. And lenders typically are looking for 10% of the loan amount. So if we're borrowing 10 million, they want to see that we have liquidity of 1 million. Typically, they'll test that a couple times, maybe at the initial underwriting and then at closing. And then there might be like a maintenance covenant that might be tested quarterly or annually. I usually try as much as possible to push it to one time a year annually. So then, you don't have to keep millions of dollars just sitting there.
We've got a bank. This is a local bank, not a national lender, but there's a local bank that we have 3 loans with. I just got an email last week to do my annual filing. So it's not just an at close with most lenders. I've got to send in my personal financial statement, my statement of real estate owned again, because the last one they have on file was from October of 21. So the things that they look for, there are provisions in that loan that if you don't maintain that level of liquidity, if you don't maintain that level of net worth, the lender has options, and I'm not 100% sure what they are.
Yeah, it's a breach of a covenant. So they could potentially call default and they could accelerate the loan, just depending on the specific format of the loan documents. I mean, realistically, are they going to actually do any of that? Probably not. It's potential. If they really want to take the property back for some reason, or they really dislike you and, they already know that they're going to take the property back. It's whether they're going to do it right now or a year from now. And if they're smarter or more proactive, they might just rather take it now. That's how I am as a lender whenever I do loans. I like to just tell my borrowers, I'm not in the loan to own business. I don't want to operate your property. Quite honestly, you don't even want me to operate a bicycle. I am a pure financial paperwork guy. That's what I like. That's what I excel at. I was made for the 21st century, by being smart and hardworking and being able to sound not stupid on conference calls and videos and being able to send emails. I was able to get a great wife and have 5 children. 200 years ago, if I had to manage like a windmill or something, I wouldn't have made it. And I would not have been able to have 5 kids. I'm mechanically unsound. Would not have made it. So this is what I like to do. This is what I want to do. So I'm not here to take over your deal. All I really want is, if you can't pay me back in time, I want you to pay me back as much as possible and tell me what your plan is to pay me back the rest. And I'd like to just charge you more. And if your plan doesn't make sense, or you're being super uncooperative and it becomes clear that I'm just going to have to take this from you later, I'd rather just take it from you now. Save us the headache.
So let's talk about going in, and what's your criteria for working with a group or a sponsorship team?
The group and the team is way more important to me than the deal. So I am looking for quality teams. What do I mean by that? So it's an art, not a science. So obviously having more experience is helpful. Having gone full cycle is helpful, but neither of those are necessarily required. I was a loan guarantor on 2 deals where it was the first multifamily deal that both of those people did. But one person I knew here locally for several years, she had done a ton of single family deals, and she was an agent, and I was very comfortable with her because we'd been friendly with each other for many years. Another guy I met through networking, he worked at a commercial real estate firm for 15 years. It was not inconceivable that he could, execute on a real estate deal.
He knows the business at least.
He at least knows the business, right? And I've done deals with people who've done 20 deals and gone full cycle on many. So I'm always looking for a solid team. And then personality fit is really important to me. A lot of times in my business career that have gone not as ideal have been my overlooking personality. I wouldn't say red flags per se, but mismatches in personality. So
Mhm.
I'll just give you a great example. I met my wife when I was 16 and a half and she was 18. Our
Mhm.
personalities are a great fit, right? Because we met so young, we didn't have any sort of set ways on a lot of stuff. But there's lots of people, I mean, they're great people and they're great marriage partners, but they would just be bad fits for me.
Yeah. So I like how you're doing it. And I think you're absolutely right. It's an art, not exactly a science. You got to get along, you got to trust. I think the trust is a big deal as well. And I've been KP on 2 deals now. The last one closed 5 days ago, last Friday. So
Congratulations.
yeah. So it's a new space for me. And so I'm happy to have you on to talk about this stuff as well, because I get to learn how to do what I do better. So we talked about kind of what your criteria is. Like you said, it's you got to know the people, the personality has to fit. Do you have any financial requirements on their end, or what do you look at? Do you do like due diligence on the team, like a more in-depth, more analytical, or is it just more of a art and a science, get the feel of the people?
Yeah, so I guess I'll give you the science behind it. So the
Mhm.
science is I always skip trace. Skip trace is kind of like an informal background check. I
Mhm.
usually use at least one service, sometimes two services. I found that sometimes that discovers things that do not show up on a credit report, for example,
Okay.
or do not show up on a background check. I've run many background checks on people, and the formal background service I use that basically always comes back
Mhm.
totally clean. Don't worry about it. Here's pay me $30, right?
Yep.
So I joke about that one. I'm like, everybody I run through that is totally clean. Why am I
Mhm.
even bothering with $30? I don't even know if they do anything.
Yep.
So, but then when I skip trace people, more interesting things pop up.
Mhm.
So could be domestic abuse, which a lot of times comes from nasty divorce or
Mhm.
family situations, not like real abuse per se,
Mhm.
but more like just bad fights. Some people really have a need for speed, Brian. I don't understand this at all. I drive at like 55 to, I
Yep.
drive at either 55 miles an hour because that's the best mileage I get, or I drive right at the speed limit.
Mhm.
I am not driving 120 miles in 30-mile zones. I've got some guys that I've skipped trace that have a lot of that. So that
Yep.
just shows recklessness in general. And those are just the times he got caught, right? DWI, DUIs, bankruptcies,
Mhm.
lawsuits, just interesting stuff pops up.
Yeah.
I have done business with people who have declared bankruptcy before.
Mhm.
I have done business with people who have domestic violence on their records
Mhm.
before. All of that requires some sort of explanation
Okay.
that needs to make sense.
You made me laugh on the need for speed. When I was younger, I got 3 speeding tickets in a 3-week period once, and,
And those are just the times you got caught, Brian. So you did it the whole time.
absolutely, and you are absolutely right. Those are the times I got caught. I am proud to say that it's been probably 20 years since my last speeding ticket. I've definitely calmed down a little bit, and I don't drive the speed limit. I usually set my cruise control about 5 over, so
That's okay.
yeah.
That's totally fine. Yeah. Like if you skip trace me, I like to just tell people, I am super duper boring. And this is the
Mhm.
life that I want
Yep.
and choose. So I have nothing. I've never gotten a speeding ticket. I've never gotten a parking ticket. Never had any judgments against me, bankruptcies. I'm just totally clean. And then usually when I meet somebody, I like to just tell them up front, I've been with my wife since I was 16 and a half and I have 5 kids.
Yeah.
And I went to college when I was 16. Like I basically fit every single stereotype that you're thinking of.
Mhm.
So do not go ask me to do drugs. Don't ask me to go to the club. I'm just not interested in any of that. And if you are, just self-select out, you know.
Yeah. So something funny on one of the early syndications I did, one of our investors did a background check on the entire group, which was the first time and only time that's actually happened. And I don't drink at all. All right. In
Right.
my life, I have had 0 alcoholic beverages. All right.
Right.
So the background check he did came back with 2 DUIs.
So different Brian Briscoe, right?
It was a guy with the same last name, same birth date, different first name. His first name
Ah,
was my middle name. So I'm Brian Keith
ah,
Briscoe. It was a guy named Keith Briscoe that coincidentally had the same birthday, and
wow.
so it was funny because, I get that and I'm like, I just start laughing. I'm like, DUI, what? But anyway, yeah. So when
That
we
that
talked
does
about the
happen.
$30 for the background checks, that also made me smile because I'm like, yeah, the only one I've had on myself was worthless.
Was
So
worthless. Yeah. No, it happens. Sometimes I send the report over and they're like, that's not me. This is
yep.
just, my name is John Smith. There's like a billion John Smiths. This is a
Yep.
different John Smith.
Yep,
I'm
and
like,
it,
okay, great.
yeah, ended up costing me a little money to get that off, but whatever. But
Interesting.
so skip tracing, interesting. I know a lot of people do skip tracing, but I've always heard it more in conjunction with, trying to find owners of properties and then dive in from there.
That's
But
what it's more known for.
yeah,
Wholesalers will just skip trace everybody and they just call them all.
Yep.
Usually in violation of federal do not contact laws, but they don't
Mhm.
really care.
Yeah. So you can get a skip tracer to do more background history.
Yep.
How do you find people who can do that?
I have two friends that have subscriptions
Okay.
that they use. So one guy's a big landlord, so he skip traces all his tenants
Okay.
before he accepts them. And another guy, he's a professional lender, similar to me. We've
Mhm.
partnered on tons of stuff, and he just has the subscription. You can just sign up. I think they
Mhm.
just do a little background check on.
Yeah.
It's not like a thing that has a very big barrier to entry. Anybody can sign up for a subscription if you pay
Yeah.
the fees.
Yeah. Pay a quick fee, give them enough information,
Yep.
and they come back with a report. So going back to the sponsorship, you talk about the background checks, you talk about everything else. If you're going to give like a $1 million gap loan, what financial due diligence do you do on the group?
Yeah, so I will look at their schedule of real estate owned and I'll look at their general personal financial statement.
Mhm.
Basically, when I'm making these gap loans, I'm expecting to be paid back in 1 to 4 months.
Mhm.
What I am providing is truly a band aid solution
Mhm.
for 1 to 4 months.
Yep.
So this is not like, oh, Ethan's going to stay in the deal with me for 5 years, wipe your hands and you're done. No, I will help you close this deal so
Mhm.
that nothing bad happens to you. You don't lose your earnest money. You don't have to return $8 million,
Yep.
but you need to continue to raise money or you need to sell one of your other assets or whatever. You need to pay me back and you
Yeah.
need to pay me back with a huge return.
Mhm.
I am looking to be your most expensive best friend for closing day. As you reflect upon your business career on your deathbed, I would like to be in your top handful of most expensive people. And if I wasn't, I quite honestly wish I could go back in time and charge you a little bit more
Yeah.
because that is my goal.
I'll give you the other perspective. On the very first syndication that we put together, we had an artificial increase in interest rates. It was 2019. Fannie and Freddie were both knocking on the door, their federally mandated cap on how much money they could lend. And to slow things down, they all of a sudden started charging 3.5% to 5% on the interest rate overnight, almost. What that did to us a week before closing is with our debt service ratios and whatnot, the projected loan proceeds dropped by 600,000. And we thought we were in a really, really good spot. And all of a sudden we had to come up with 600,000 to close. And so, for people listening, Ethan being expensive, here's what would have happened to us if we didn't close. We would have lost $200,000 out of our back pocket if we didn't close because we had earnest money out. We had a lot of money already in all that risk capital. We were $200,000 into it between extension fees, earnest money, between lending fees, inspection reports, and everything else that we had to do. And so when you're looking at it from that aspect where you've got a week to come up with $600,000, Ethan is a really, really perfect solution because you come in, he writes the check, you guys close, and then you have time to finish raising the money like you normally would. Or if you just didn't quite hit your mark, same thing. So I think it's a great service, and quite frankly, I wish I would have known you 3.5 years ago.
Hey, I didn't even figure this out until July, so I would
Yeah.
have been confused if you called me 3 years ago.
Yeah, right. Yeah, exactly. That was a position where we could have really needed a gap funder. We ended up making between the four partners probably dozens of phone calls a day trying to bridge that gap. And we were sweating bullets, the day before closing. And I remember when we got that closing statement, the draft closing statement the day before we were closing from the title company, I looked at the number at the bottom and I'm like, oh my goodness, good. We had like $8,000 more in the bank than we needed to wire, and it was, I've got to say, in all my life, 20 years military service, 4 deployments, that closing was the most stressful thing I've ever gone through. And so when you're in that position, the gap funding is a great tool. And we would have paid a pretty hefty fee to get somebody just to cover that gap for us.
Exactly. And that's kind of what I do and what I specialize in. It takes
Mhm.
advantage of two things that I just happen to have, which is I keep a large amount of my net worth liquid because
Mhm.
I want to be a loan guarantor. So in general, I just keep as much liquid as I possibly can. And then number two, I'm a corporate attorney that used to work on Wall Street. So when you sweat bullets and you're worried for that week, that's just like a normal day to me.
Yeah.
So I'm comfortable, doing all the work late at night. I can work over the weekend. I don't really care. If the deal is good enough and the premium you're paying me to come in to help you is high enough, I'll drop everything I'm doing and I do the work myself. So there's not going to be any of this BS like, oh, well, Ethan had to go hire a lawyer and the lawyer's slow, or advance him 5K for the retain. Like, there's none of this. I'm basically just doing the work myself to the maximum extent possible. So I know it gets done correctly on time.
Yeah.
And then I'm not going to broker money. I'm not calling 12 people to try to raise investors. There's none of that. When I make a commitment on a Friday that I'm going to fund on Monday, it's there.
Yeah.
Like I said, you can go watch USC Utah. You can go watch the Cowboys.
Yeah.
You don't need to worry about it unless I get hit by a bus.
Yeah.
And I'm not available.
Utah was a great game, and
great game.
I will
for you.
rewatch that every single weekend. So actually on the back of my phone, I've got the little sticker they gave us, walking into that game. So
nice.
USC Trojans, Utah Utes, October 15th, 2022. But
a day that
best
will live.
I've attended.
Yep, a day that'll live in infamy in our circles.
Oh yeah, it was a great game. But anyway, let's look at the potential downside to what you do. So let's say you put the money up, and for some reason the group's not able to raise the capital. I know you got to protect yourself and your investment, but what things do you put in place?
Yeah, so I have a standard set of loan documents. So I'm not in the business of making unsecured loans. That's just not a great business to be in general. So what I do is kind of dovetailing back to your original point of how I do due diligence on the team. So I'll look at their personal financial statement, and I'll look at their schedule of real estate owned. So I'll just tell them, hey, I look for a 2 times collateral coverage ratio. So what does that mean? It's just a fancy way of saying, look, if I'm going to lend you $1 million, give me something that's worth 2 million that I can take. Most real estate investors do not have a lot that's easily takeable.
Yeah.
So they're not going to really have a first lien that, I can't put a first lien on their house or a first lien on a rental. They just won't have it. Right. What they typically will have are general partnership interests in other deals. So if they're experienced and they have, multiple deals outstanding right now, hopefully they're performing and they're on track. So I can take a pledge of security in those equity interests. That's not nearly as hard as it sounds. It's a simple pledge and security agreement. It's about 10 pages. And then there's a UCC filing that would be done. Sometimes it might not be necessary to do the UCC filing. That ends up being negotiable depending on the situation. And then we are not in the business of triggering any defaults or loan covenants in the sponsor's business. So we will not usually make the loan to the entity that's buying the property that we're talking about, because that would be an unpermitted lien or an unpermitted debt or undisclosed debt. So we would do our loan outside of those entities so that no defaults will be triggered. Okay. So like I said, I went to Columbia Law School when I was 19. I wasn't the smartest guy there, nor the hardest working guy, but I know how to do docs.
Yeah, makes sense. So basically, to do the loan, you're doing a secured loan, but it's going to be a personally guaranteed loan for the GP, not attached to the actual property or the entity created to own the property.
That's right. We just do it outside of that deal because otherwise there's just more sensitivity to the fact that certain defaults could have been triggered, or lenders may discover that and not want to close. So we'll just do it outside of that. And like I said, if it's a secure loan, you secure it with equity that you have in some other property.
Okay.
So mechanically, what does that mean? Kind of back to my earlier point, I'm not in the business of loaning to own. I don't want to operate the property. I don't want to operate a bicycle. So you come to me and you say, hey man, I can pay you back half. I need 2 more months. Here's why. Here's how I'm going to do it. Here's why I'm confident. That sounds fine to me. I'll extend and I'll just charge you more. If you come to me and you say, hey, Ethan, I've raised $5. Here's 5. I don't have any plan. I've called everybody. I don't really know what to do. That's when that's not acceptable answer to me. That's when I know that I'll probably have to take it later. So I might as well just take it now.
Makes sense.
So I will be exercising my remedies. But again, I like to deal. So if I've done my underwriting correctly on the art and not the science part, if the people are personalities I can work with, I don't really think we're going to be in those type of situations very much, unless just really weird market things or personal life things end up happening for the sponsors that just make it impossible. But in general, if people are able to make significant progress or pay downs or have a good plan, that's not a problem.
Yeah. All right. Makes sense. So you provide liquidity for people to be able to close. You just make sure that you're going to get paid back, which is something that I think everybody's going to understand. And if people are working towards a solution, they've got a good plan. If they don't quite meet the original deadline put up there, you're going to work with them.
That's absolutely correct. Although, just to be fair,
Yep.
if at the beginning, if that's discovered that, hey, this was just like a bald lie at the beginning, when I said, hey, do you think you could pay me back in 2 to 4 months? Right. If you
Yep.
say absolutely, and then it becomes, 10 months or a year, that's not really the spirit of the deal. And that would make me look upon the initial interactions as very not pleasant. And so that wouldn't work really well either. So if you come in and you just straight up lie and just say whatever you need to say to make somebody do something, that would not be a good personality fit.
Yeah, not good business. So,
No.
all right. Question then for you is, how can people get in touch with you if they're interested in your service?
Yeah, so email is the best way to contact me. My email address is just my name, ETHANGAO@gmail.com. I was the first guy with that name to sign up, so I got to keep it. I respond to my emails all the time. Unless I'm in a meeting where I'm asleep, I respond very, very quickly. That's just how I've always been trained to do my work. And then sometimes people like to message me on LinkedIn. That's totally fine. If generally, if you email me, I'll email you back. If you call me, I'll call you back. If you LinkedIn message me, I'll message you back. If you text me, I'll text you back.
I will say, Ethan and I have emailed several times before, and he is one of the faster responders that I've ever seen. So, end of the day, just to recap, on every time you get a commercial real estate loan, you need net worth, you need liquidity, and you need experience on that deal. Ethan can provide all three, but more importantly, and I think what he's moved to more recently is the gap funding. So if you're trying to raise 8 million to close and you only have 6, Ethan can bridge that gap for a short period of time, give you guys some breathing room, allow you to close without a ton of stress, and then give you 2 to 4 months on the back end to continue to raise money, which is allowable when you're doing syndications. I think 6 months is the number on that one, but you can still raise money after you close on the same syndication for a period of time to repay that loan. So that's what I would guess most people who take you up on your services are doing, is they're raising more money. For whatever reason, they didn't make it to their cash to close amount before closing. They're just continuing to raise after the fact.
It could be tied to an asset sale as well. So
Okay.
sometimes the sponsors say, well, hey, I'm selling this other asset and I'm going to get a ton of money in 2 months. So I'll just pay you off then, and then I'll just deal with it however I want. That is also a pretty good solution, although that's probably not my preferred solution. And here's the reason why. I think if you've already started doing all the fundraising, you're like the Energizer Bunny. You've already been wound up.
Yep.
So continue to fundraise. You're not really doing anything different. You just continue doing what you're doing.
Yeah.
Just happens to be after closing. Whereas if you're selling something, it's just a different risk profile of the things that could happen between you signing a contract to sell and actually closing. People might retrade you. They might not qualify for the loan. They might need extension. It just becomes a different strategy, but it is acceptable.
Yeah. On the sell side, we've had 2 properties under contract that have fallen out. It does happen. We actually have one right now. And you mentioned that sale side where the buyer was waiting for a sale to be able to come up with the equity to buy the property. And this one's still under contract. We were able to negotiate an extension for him to sell a second property because the first one didn't sell on time. But it does happen. And I understand, your reluctance on that one. Properties don't always sell at the end of the contract, and there's lots of reasons why that could happen. That said, I very much appreciate you coming on to the show today. If anybody's interested, EthanGao@gmail.com. We're going to have that information in the show notes. So definitely reach out to him. And Ethan, it was a pleasure having you. Thank you very much.
Thank you so much for having me.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community yet, which we call the Tribe of Titans, you are missing out. Get 30 days free by clicking the link in the description to this episode, or go to thetribeoftitans.info, and we'll see you there.